But we can go beyond that. But certainly, when we took over Berkshire, Berkshire was selling at $15 a share, and gold was selling at $20 an ounce. And gold is now $1,600, and Berkshire's $120,000. But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day, and you can coo to it, and you can caress it, and you can fondle it, and 100 years from now, you'll have 1 ounce of gold, and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400. But you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now, I don't like fixed dollar investments at all. I don't like short-term bonds. I don't like long-term bonds. We own a lot of short-term bonds, but that is not because we like them. That's just a parking place. But the alternative, in my view, I mean, certainly commodities can be an alternative, but the alternative is income-producing assets of one sort or another that are not fixed dollar type investments. And so I've said consistently for the last few years, I would vastly prefer to own common stocks than fixed dollar investments over a 5 or 10 year period. I don't know about the next 5 hours or 5 days. And that might very well extend to rental real estate. It might extend to farms. I mean, an investment, you're looking for something where you put out money now, and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you. So there's 2 types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm. And then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are 2 different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it. If they closed the stock market for 10 years and we owned Coca-Cola and Wells Fargo and some other businesses, it wouldn't bother me because I'm looking at what the business produces. If I buy a McDonald's stand, I don't get a quote on it every day. I look at how my business is every day. So those are the kind of assets I like to own. Something that actually is going to deliver, and hopefully deliver to meet my expectations over time. I mean, there's all kinds of things in this world that are going to go up and down in price. Maybe hamburgers will tomorrow. But I don't know how to judge that. I do know how to judge, to some extent, the earning power of some businesses. And the real test of whether you would like it as an investment is whether you would be happy if it never got quoted again, and just in terms of what the asset did for you. But that doesn't. I will say this about gold. If you took all of the gold in the world, it would roughly make a cube 67 feet on a side. So if you took all the gold in the world, we could have a cube that went down there 67 feet, 67 feet high, and that would be the whole thing. Now, for that same cube of gold, it would be worth, at today's market prices, about $7 trillion. That's probably about 1/3 of the value of all the stocks in the United States. So you could have a choice of owning 1/3 of all the stocks in the United States, or you could have a choice of owning that little block of gold, which can't do anything but kind of shine there and make you feel like Midas or Croesus or something of the sort. Now, for $7 trillion, there are roughly 1 billion acres of farmland in the United States. They're valued at about $2.5 trillion. It's about half the continental United States is farmland. You could have all of the farmland in the United States, you could have about 7 Exxon Mobils, and you could have $1 trillion of walking around money. And if you offered me the choice of looking at some 67-foot cube of gold and looking at it all day, you know, and maybe touching it, and fondling it occasionally, you know, and then saying, you know, do something for me. And it says, I don't do anything. I just stand here and look pretty. And the alternative to that was to have all the farmland in the country, everything, cotton, corn, soybeans, 7 Exxon Mobils. Just think of that. Add $1 trillion of walking around money. You know, maybe call me crazy, but I'll take the farmland of the Exxon Mobils.